Miami's luxury condo prices are shifting by the hour. In fact, last week, a penthouse in Brickell jumped $150,000 overnight. And it wasn't a bidding war. It was AI running dynamic pricing algorithms behind the scenes. So here's the question. If artificial intelligence can raise prices while you sleep, what else is it changing about real estate investing in 2025? As someone who's spent the last 12 years advising high-net-worth clients across the US and Australia, I can tell you, this isn't hype. It's happening, right now. From instant property valuations in Austin to fractional ownership of Miami's prime real estate, PropTech is rewriting the playbook. In this video, we'll break down exactly how AI and PropTech are transforming real estate across the United States in 2025, and more importantly, how smart investors are using this shift to move faster, cut costs, and maximize returns. So if you're serious about staying ahead of the curve, you'll want to stick around. Take a look at this chart. Miami's average days on market before sale has dropped by nearly 30% in the past 12 months. Miami real estate, average days on market, 2024 versus 2025. AI-powered property valuations, speed and precision that changes the game. One of the biggest frustrations I hear from investors, especially those managing international portfolios, is how slow and clunky property valuations used to be. If you've ever tried to close on a property in Manhattan or Sydney, you know the drill. Outdated comps, human error, and reports that take weeks. By the time you get the appraisal, the market's moved on. But in 2025, that's history. AI-powered valuation platforms like House Canary and Zillow's latest neural network-based Zestimates are now doing in seconds what used to take weeks. And they're doing it with a level of precision that wasn't possible even 2 years ago. For example, Zillow's AI now factors in millions of property images and geo-specific data points, adjusting for micro-trends that a traditional appraiser wouldn't catch. Take a look at this chart showing how AI-driven valuations have narrowed the pricing gap compared to manual appraisals in major U.S. cities like New York and Austin, AI versus manual valuations accuracy, New York and Austin, 2023 versus 2025. And here's where it gets really interesting. I spoke with Daniel Reyes, a real estate investor based in San Francisco who focuses on flipping high-end properties in Austin. He told me that last quarter, thanks to real-time AI valuations, he was able to close 3 deals in under 30 days. Before adopting AI, that process used to take him nearly 3 months. For investors working across borders, whether you're in the UK looking at Miami condos or in Canada eyeing Austin multifamily, speed is leverage. And with AI, you're moving at lightning speed. Automation of transactions. Closing deals in hours, not months. If there's one thing investors hate more than uncertain valuations, it's paperwork. The back and forth with lawyers, agents, escrow officers, it's enough to make anyone lose patience. But 2025 is the year automation finally delivers on its promise. Blockchain smart contracts are no longer just theoretical. Platforms like Opendoor and Propi are using them to facilitate closings in as little as 48 hours. And I'm not just talking about small residential properties. Some of the most active deals right now are in the $5 million to $15 million range, particularly in Miami's Brickell and New York's Upper West Side. Here's a personal example from a client I worked with recently, a Canadian investor who wanted a fractional stake in a luxury development in Miami. Normally, the due diligence alone would have taken weeks. But using tokenized real estate platforms, he was able to review smart contract terms, verify blockchain records, and finalize his investment, all within 4 days. Check this out. Miami has seen a surge in tokenized real estate transactions with over $500 million in tokenized assets traded in 2024 alone. Tokenized real estate transactions, Miami, 2020 to 2024. For cross-border investors in the UK or Australia, this level of automation is a game changer. You no longer need to be physically present or rely on third-party intermediaries who slow down the process and inflate costs. And as someone who's managed both traditional and tech-enabled deals, I can tell you, once you've closed on the blockchain, you won't want to go back. AI-enhanced property management, boosting profits while cutting workload. Property management has always been one of the least glamorous parts of investing, and if you've ever managed units in high-turnover cities like Sydney or London, you know how quickly maintenance calls and late payments can eat into your margins. But AI is changing that too. Platforms like Turbo Tenant and Yardi Breeze are automating rent collection, lease compliance, and tenant screening. What's more impressive is their predictive analytics. They're flagging potential tenant issues before they happen, like late payments or maintenance requests, allowing landlords to act proactively. For instance, in Austin, one property manager I know uses AI-driven systems to monitor building energy usage. The result? Energy costs dropped by 15% and tenant satisfaction went up. Take a look at this chart showing energy savings in AI-managed properties in Austin and Miami. Energy cost reduction, AI-managed properties, Austin versus Miami, 2024. And in Miami, where rental demand is high but tenant turnover is even higher, AI-driven management platforms have reduced vacancy rates by up to 20% in prime locations like downtown and Brickell. Real talk. One of my clients, Lisa Tran, who manages a portfolio of short-term rentals in Miami, told me she now spends half the time on management tasks compared to 2 years ago. "I used to dread the maintenance requests," she said. "Now the system flags issues before they escalate and tenants feel taken care of without me lifting a finger." Personalized buyer and tenant experiences, the new standard in 2025. Remember the days when buying property meant endless emails, site visits, and playing phone tag with agents? Not anymore. AI chatbots, virtual assistants, and AR/VR tours are now delivering hyper-personalized experiences that buyers and tenants have come to expect, especially in tech-savvy cities like San Francisco, London, and Sydney. In Australia, for example, virtual property tours are standard in 2025. I have a client in Melbourne who purchased a waterfront investment property in Brisbane after doing 3 VR walkthroughs, without ever leaving his home office. Take a look at this chart showing the increase in virtual property tours in Australia from 2022 to 2025. Virtual property tours, Australia, 2022 versus 2025. And this isn't just about convenience. AI-powered platforms like CoreLogic's OneHome are matching buyers with properties based on their lifestyle preferences, budget, and long-term goals. This isn't Zillow showing you random listings. This is precision matchmaking. For landlords in cities like London, tenant experiences are also being optimized. AI chatbots handle 24/7 inquiries, while smart leases ensure quicker onboarding and fewer disputes. Bottom line? Better experiences lead to faster deals and lower vacancies. And for you as an investor, that translates directly into higher ROI. Sustainability and smart buildings. Green is the new gold. Now let's talk about one of the biggest growth areas in real estate for 2025, green buildings and sustainability. Globally, real estate accounts for nearly 40% of carbon emissions. But cities like Austin, Toronto, and London are now incentivizing eco-friendly developments, and savvy investors are jumping in. In Austin, smart buildings with AI-managed energy systems are not only cutting costs by 15%, but also attracting premium tenants who are willing to pay higher rents for sustainable living. And in Canada, Toronto's Green Building Incentive Program has boosted green-certified property values by 12% in the last year alone. Take a look at this chart comparing rental premiums on green-certified versus non-certified buildings in Toronto and London. Rental premiums, green-certified versus non-certified buildings, Toronto and London 2025. One of my UK-based clients recently invested in a net-zero apartment complex in London. He shared that the property achieved full occupancy within 3 weeks of launching, largely because tenants were actively searching for sustainable housing options. And here's the kicker. These green buildings often qualify for significant tax breaks and incentives, making them an obvious choice for long-term cash flow and capital appreciation. Challenges and risks, what investors need to watch. Now, before we get too starry-eyed, let's address the elephant in the room. PropTech and AI adoption comes with real challenges. First, the upfront costs for AI tools and green building technologies can be steep. Not every investor can drop six figures on cutting-edge systems. Second, there's regulatory complexity, particularly around data privacy. If you're an investor based in Canada or the UK, you already know how strict GDPR and similar laws can be. AI platforms that handle tenant data must be fully compliant. Take a look at this chart highlighting data privacy concerns among investors in different regions. Investor concerns, data privacy and AI adoption, USA, UK, Canada, 2025. And then there's the risk of market saturation. Miami, for instance, has over 32,000 new units coming online this year. Without proper AI-driven management and tenant targeting, vacancy rates could spike. I had a call last month with a UK investor who pulled out of a Miami project at the last minute. Why? Because while the tech stack looked impressive, the local market data suggested softening rental demand in that specific area. This is where deep, hyperlocal insights matter more than ever. What this means for investors, the opportunity in 2025. Let's take a step back. What does all this tech and transformation really mean for you as an investor? If you're based in the US, UK, Australia, or Canada, and you're looking at diversifying your portfolio or scaling up existing assets, this is your moment. The combination of AI-driven speed, PropTech efficiency, and green incentives creates an environment we've never seen before. For example, markets like Austin are seeing institutional-level tech tools becoming accessible to individual investors. You no longer need to be BlackRock to leverage predictive analytics on rental yields. I've seen small investors in Sydney and Toronto run detailed simulations on cash flow projections within minutes. And it's not theoretical. It's driving real returns. Check this out. In Austin, properties managed with AI systems are seeing an average 8 to 12% boost in annual net operating income. AI-enhanced NOI increase, Austin, 2024 versus 2025. And in Miami, fractional property ownership, powered by tokenization, is opening doors for investors who, just a few years ago, wouldn't have dreamed of owning a piece of waterfront luxury real estate. The technology has leveled the playing field. But here's the flip side. As this tech becomes mainstream, the early mover advantage will disappear. What's giving some investors the edge in 2025 won't be novel by 2026. Timing is everything. The risks you can't ignore. Now, I'm not here to sell you a fairy tale. There are risks, and they're real. We talked about market saturation earlier. Miami's 32,000-plus new units could create oversupply headaches if they're not paired with the right tenant strategies. And while PropTech tools can automate transactions and management, they don't replace due diligence. AI can flag data trends, but it won't visit the neighborhood for you or understand the nuances of a local tenant base. That's still on you. Plus, regulatory frameworks are tightening, especially in Canada and the UK. Data privacy, taxation on digital assets, and compliance issues around smart contracts are areas you'll need expert guidance on. But let's be clear, the biggest risk? Sitting on the sidelines while others move fast. Why you need to act now. Let's recap the key insights we've covered today. First, AI-powered property valuations are giving investors near-instant clarity on deal opportunities, dramatically speeding up decision-making. Second, automated transactions and smart contracts are closing deals in days, not months, especially in high-demand cities like Miami and New York. Third, AI-driven property management systems are cutting costs and boosting profitability while delivering better tenant experiences that lead to lower vacancies. Fourth, green and sustainable buildings aren't just good for the planet, they're good for your portfolio. Premium rents, tax breaks, and higher demand make them some of the smartest plays for 2025. And finally, timing is everything. This wave of PropTech and AI adoption won't wait for you to catch up. Early adopters are locking in the best opportunities right now. Take a look at this final chart, highlighting projected returns for AI-powered real estate portfolios versus traditional portfolios in 2025. Projected ROI, AI-powered portfolios versus traditional real estate portfolios. 2025. Now, here's the question. Are you ready to leverage these innovations before they become standard? Or will you wait until the best deals are already gone? Join the conversation. Drop your thoughts in the comments below. Which city do you think will benefit most from PropTech in the next 12 months? Miami, Austin, London, or Sydney? Or maybe you're already investing in these markets. What's your experience been with AI and PropTech so far? I personally reply to every comment, and I'd love to hear your perspective. And if you found this video valuable, don't just sit back. Hit that like button, subscribe to EstateScope, and turn on notifications. We've got deep dives coming up on topics like tokenized real estate, AI rental algorithms, and sustainability investments you won't want to miss. Because in real estate, the early movers win, and EstateScope is where you stay ahead. Thanks for watching. I'm James, and this is EstateScope, where data meets opportunity in global real estate. See you in the next one.